Good morning, good afternoon. You guys able to hear me and can see the document?
Yep.
All right, sounds good. Thank you. Okay, so give me a moment. So how's everyone doing? Can't complain, I guess, about when it comes to the market. Good afternoon, Ramesh. Yeah, Shri says he's doing fine, fine. What a week can make all the difference. That's what I learned last week. Ramesh say, yeah, good week trading. I don't know which day was it. Um, I think that was the day when maybe it was after Meta or something when all the stocks, especially the tech ones, they kind of were crashing or were down, and I was like feeling too greedy. So I did whatever I had to do in the morning. Then I went out for a jog. It was a good sun in Bay Area, so I'm like, hey, I just need to get off the computer so that I don't do anything stupid. Whenever I see the markets deep in red or too high in green, I generally would like to get away from my laptop or from my computer. Then I post, I'm like, hey, it's a nice sunshine, so it was good day to be out. And I've seen that generally it helps. The other thing which helps me is get away after 12:45 Pacific time. Because sometimes that when the market is closing and I'm still sitting there, um, in past I've done some stupid mistakes. You just get carried away by what's happening in the market, and then you see that the clock is ticking, 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 ticking. Oh my gosh, it's running out, and you do some stupid mistakes. So unless it is a pre-planned stuff, I don't want to sit in front of my terminal near market closure. So what do we have today? Today, I think so. Now we are back in earnings season. So we'll go through a bunch of earnings, I guess, for next 2, 3 weeks. And of course, we'll look at what else is happening in the market. Anything that you guys have in your mind. Did you guys buy anything last week or sell anything that you have, or did you do anything that you have not done in past few weeks? Nope.
Rivian.
What did you do with Rivian?
Actually, no, I don't think I did anything, but I buy quite a few shares, and I think I brought this up in the past.
So what attracts you to Rivian? What's the story? Amazon
Well,
partnership?
uh, they make badass cars. Not that everybody wants to buy them. They look special. It's just I probably didn't put more than $1,000 down, so I'm not really worried about it if I lose it. I mean, I've lost a lot more on Alibaba options. It's just, I bought the shares and I own something and there's no expiration date. And someone else made a very good presentation about 2 years ago about why Rivian is a winner. Amazon.
Yeah, Amazon, I mean, that I agree because Amazon has invested in Rivian and they have orders with Rivian. But like I think I've said earlier also, if there is another US-based pure play EV company that I would want to pick, I will look at Rivian. But I haven't looked at Rivian yet. I don't have a place in my portfolio to add another ticker for long term.
Well,
So
maybe you could comment on Lee Auto, why it's going down. I mean, it's not that I really care because I have a very small, maybe 100 shares, but it's still going down.
So all the Chinese EV companies had gone down because of a cutthroat pricing war that we are seeing in China, right? Elon Musk cuts the Teslas, and then you see NIO as well as XPeng. They all are engaged in price wars. So it's not only to Li Auto. I own Li Auto. Even I own NIO, I have some Xpeng, and all the stocks of these three Chinese automakers, including Tesla, has been not doing great for past many weeks. But if you look at the profile of Li Auto, that was the I mean, I could find that's the only profitable Chinese EV maker which has options on it. I mean, BYD could be another one. I've not looked at BYD. And so I started rotating whatever profits I'm generating from my Neo and Xpeng, whatever cash I'm generating from there, I'm rotating it into Li Auto, not increasing my exposure to Chinese EV, but just rotating it. So this week, there was a in Beijing, before I go to the Beijing stuff, other thing was on a Li Auto, they had released a new vehicle, I think called Mega or something. Uh, that wasn't received very well in the industry, but I don't know if that is the reason why the stock was down because every other EV maker was also the stock of every other EV maker was also struggling. So that's my thought on Li Auto. But this week there was a auto show in Beijing, and if you see Neo and all these companies, they had a good week. This week it was because they have shown some good new models and you know what they are doing. In basically they share their plans with in the auto show. So that may be a reason why suddenly if you are seeing all these Chinese EV companies, stocks it performing has had performed this week, it was because of that. So it doesn't really, I guess, matter in a long term, the 1 week performance. So I just pulled up Neo, right? Neo was up like 9% on Friday. And I was also surprised. I'm like, what the heck is happening? And then I realized, oh, there's a auto show going in Beijing, and they must have unveiled some new model or whatever. I haven't followed. I mean, these are small positions. I don't spend too much time on it, but kind of a schmuck insurance. And obviously, it doesn't cost me anything to hold this. These are all paid up. They paid up for themselves in option premium, so I'm not much worried. All right, I see another question. Got Google call assigned. Yeah, I good thing is that before earnings announcement, and this is where I was debating, uh, I think it was not last week, but a week prior. I had a put spread and a covered call on Google, and it wasn't yet making my profit target, but it was like almost 30% of max what I could have made. And I was debating, maybe it was like not this Friday, recent Friday, but a prior one. Should I close it? It's earning coming up next week. IV is gonna go even higher. It'll go, and then I don't know how it will gonna move. And then I decided, what the heck? Let me close it. That was my May expiration trade. I took whatever profit. But then I put in my June trade. But June trade, I think my call side, and let me see what June trade I had. I think I have maybe a short put and a call spread. And then, but the call is very far away. It is like, let me just check Google. June. Yeah, so June I have a call spread and a short put, but the short call of the call spread is 185. So I still have time. But anyway, so that turned out to be a good decision. Sometimes you don't have to get too greedy when you're approaching earnings. So I still hold my Google. And whatever profit we made, that reduced the cost basis. So yeah, but you can't complain, Ramesh. If Google got assigned, that's a good thing, right? Let's say you made money in Google. Maritza says, I did an iron condor on Melly and it worked out great. Expired worthless. That was after having to roll it last week. Yeah. I think I still have iron condor on Melly. Again, it's right in the middle of my break evens and isn't making, I don't think it's even making like 40% of max what I could make. Otherwise, I would have closed it. I am little concerned. I didn't see Melly reporting results next week, and I don't see on their website when are they going to report the results. So I need to do a little more investigation on what's happened. So this is my biggest individual stock position. So I have to figure out, is everything okay with Melly? But in any case, so congratulations, good that it worked out for you. Mine is right in the middle of a break even, sir, and I think I have $150 worth of movement available on both sides. So as long as it doesn't move more than $150, I'll make on my option trade. If it moves more than $150 on the call side, I'll make on the long portfolio side. So I really don't have any complaint about that. Google put, she says Google put assigned covered my short position. You were short on Google and sold CMG. CMG has been like, this burrito company is like minting money. This is one company which I always think, oh gosh, I never got into CMG. I don't know why I should have, but this is one company that just ran away from me. So where is CMG? CMG. Geez, now it's like $3,000. Not that long ago, maybe 2016, 17, this was like $250 stock. And that was a rat scare.
I have
And
some
it
short
continued.
calls on CMG too. at
You had short,
3,500.
was that naked or was that covered?
It's a covered one.
Okay. Yeah. So one thing which I learned in, I think in 2020 and 2021 is if there are some stocks that I really, really want to hold, and you know all these things, but for the benefit of others, is either I'm gonna only do partial calls, like I did Google. I own more than 100 shares of Google, so I can do one covered call. If that get assigned, okay, I still have room, I still have stocks available to continue my upside, or I will maybe do a wide call spread. Let's say in case of Google, the one which currently have, I think the short put is at 145 and the call spread is 185 and 205. If things go crazy on Google, yeah, I didn't make from 185 to 205. I didn't make that $2,000. But when I did the trade, the stock was at 150. So anyway, I made decent amount. And on top of it, I own more than 100. So I don't know in CMG if it was like just a call. And in some cases, then you have, I had some seller remorse in 2020, and then I had to change my strategy. And this is what in the bootcamp session, I'm going to talk about some of these, my own learnings from past years. Most of the chip and the related stock has recovered. This is what the market is so fickle. But I love that the market is fickle because it gives us opportunity to go and pick the stocks when you see these wild moments. When ASML and TSMC reported results, market dumped on chip stocks, and when these Google and Microsoft report results, all the chip stocks will start to recover. Freddy says, my friend had two covered calls of Google, got assigned at 165, or thing the entire week, no decay on premium compared to other stocks. Yeah, and because it is the earnings season, right? So IV will continue to stay will continue to stay high, and the premium just won't decline. Number two, even the VIX has been high. So over whole last week, like VIX was around 19, 18. So and if you opened up the positions when VIX was here, and I don't know where your friend opened it, but I'm assuming if you opened it a month ago, then VIX would have been at 14. So you're anyway, your position is being challenged by increase in IV. And I saw this in many of the other, I think I talked about it in previous session or a session prior to that. On 4/12, there was, the market had I think market was like deep in red or something, and the IV was super high. Was it 412? Yeah. Um, on this day. Yes. So, and I think we did talk about it in this session, and Jay was saying that some of the ETFs had their IV rank like almost 100. And I'm like, yeah. And I was like, that day I traded, I sold options in many tickers that I have not touched in like almost a year. And I was waiting for those trades to come in. And you are right that the, the decay wasn't happening. But anyway, I closed it because all of them actually made money. I think except one, which is still open, which is XBI. I did IVR, real estate. These were all ETFs, and those were all delta neutral ETFs because I did not have any directional bias on whether it is gonna go, am I bullish or bearish? I had no directional bias, but I just wanted to take advantage of the opportunity that was presented by the market with a high volatility. And I think all of them worked out except one, XBI, which I'm still holding. So yeah, but the decay did not happen as I expected because now those are all were like 17th May. And I'm like, why is premium, why is the decay still not coming in? So I closed it lower than my general profit target, but it was a good trade. BYD is great. BYD company is great. They don't have options, and so I can't reduce the cost basis. With Chinese, when I'm investing in Chinese company, I want to have a way to reduce my cost basis so that if things go belly up and you later on figure out, oh, it was a fraud or something, like something's happened with Luckin Coffee, at least I am not hurt that much. So that's why I'm not in BYD. I know Warren Buffett's in BYD. He talks very highly of the CEO of BYD. He says he is Elon Musk plus. Uh,
Excuse me, Buffett was more or less initial investor, not the angel, but
no,
before it was a hell of a long time ago. Like before 2009, he went into BYD.
yeah.
That was before they started even making cars.
Oh, yeah, I understand. And he talks very highly of the CEO. He says he's probably the exceptional CEO and the only CEO that is like great engineering mind as well as business mind. So, so from a company perspective, I have no issues in BYD, just that it's in China and it is not optionable. And given the geopolitical issues, I want to have a way for me to continuously reduce my cost basis, which I can't do in BYD. If I hold it, I just hold it and then wait. Ramesh did make money. Earnings are 5-1. I think you're referring to Mercado Libre. I did not see it on the Mercado Libre website. I think some of these websites, they were telling that it's on one, or some of them said it's on two, but there is no press release on when are they gonna announce the Q1 results. So that's got me a little worried because I also thought it is next week, but then I did not see it, on Earnings Whispers. Then I went to the website and I did not see it on the website either. What do you think about the covered call ETF, Yield Max ETF? You will get the return, but overall capital perspective, let's say if you look at Yield Max ETFs related to QQQ 2023, if you just held QQQ, you would have made a lot more money. So there is no free lunch. You get the 10% dividend, but that doesn't mean that the overall capital has increased. I mean, would you be happy with the 10% return on your capital, or would you wish that you would have held QQQ in 2023 and would have gotten 40%? So that's a decision you have to make. There is no free lunch. And ever since I think the SEC changed the rules, relaxed the rules to allow individual stock ETFs in, I guess, in 2021 or something. You're I'm seeing a lot more individual stock-based ETFs in the market, and with covered calls premiums are higher because of interest rates. Even more ETFs related to monthly income, covered call, buffer ETFs, yield max ETFs. So I think we did talk in detail about yield max ETFs in one of our previous sessions where we went through how they generate and what are the pros and cons of it. You may want to go back and look at there. Let me take a note so that near the end of session I can tell you which session was it in which we covered yield max ETFs. Iron Condor CMG worked well. Domino's on Monday. Google my card cost stack at 110, rolling it over last 6 months for $50 credit rollover. Yeah. At some part of a time, and again, continue to do maybe a short put against it so that you can continue to get more and more premium. Can't see other people messages. I don't know. I mean, I'm assuming other guys are able to see all the messages. What do you think about the latest news on Coupang? I think earning is coming up soon. What's the news on CPNG? Was there latest news? Oh, stock sinks. What happened? Last year they had the Farfetch. And the stock actually had been performing really well over the past few days because I had a strangle on it with a short call at 21, and I'm just waiting for the stock to come down so that I can close my strangle for profit. Otherwise, I'll either roll or I'll let 100 shares go away. But what happened on the recent one? This may be just AI generated um, stuff. Who knows? Yeah. So if you're aware, Freddie, can you talk about it? What happened with Coupang? Anyway, if there is earnings, yeah, earnings coming up, then I'll go through earnings. I mean, I'm bullish on that stock. Oh, yeah. So yeah, that was okay. So this is I'm aware of. I thought that you were talking about some negative news. Yeah. So they did raise their fee, and they and market actually loved it, and that's why the stock went high. So this I'm aware of. I thought there was something else. Whenever it is like a foreign companies, when somebody, did you see the news? I'm always trying to move towards the negative side of the news. I'm like, I did not see what went wrong in the coupon or something that I missed. Now this I'm aware, and I think, yeah. So I think I took a note in my hold on, in my thesis document saying what I want to watch out for. Yeah, so I think what I want to see is their usage in a few quarters after this, increase in the fee. Are they going to lose any subscribers because of that or not? Maybe I think I did take note of it. Yeah. Yes. Yeah. So I do want to watch out for the WoW membership count in Q4 to see if this impact of the price is actually, you know, good, or does it cause a lot of subscribers to go for the exit door? Until then, the company has been executing, so I have no concerns on it. But if it cause, it's similar to stuff if Amazon increases the Prime subscriber fee, and if user still continues to subscribe to Amazon, yeah, that worked out, man. So I don't have any other feedback besides saying, hey, I want to watch it out for the membership count. So yeah, I'm not making any drastic decision or any changes for Coupang yet. All right. Okay, let's continue on today's session. Welcome everyone. This is our 217th session of meeting every either Wednesday, or now we've also included every Saturday, and nowadays we are also meeting on Wednesdays, which is little more deep dive into options through our bootcamp drills. So yeah, I'm enjoying it. Hopefully you're all being benefited by it. As always, whatever we discuss here is education and entertainment. Don't take it as a financial advice. With that disclaimer out, let's jump into today's session. So this is what the previous week was, and this is what our current week finished. In just a matter of week, things have moved from being deep red into good color, green color. So that is why I don't want to make any stupid decisions just because 1 week didn't pan out to be well. It's a long-term game, and I'm happy to play along and stay invested for really long term. Sector performance, S&P is now last week it was like up only 5%, even though it might seem that the market is all deep red, and CNBCs will talk about markets in turmoil, but it was still up 5%. And this week we notched up another gains, and we're now getting close to 6% for the year. And this is what, fourth month? We're in a fourth month and 1/3 of a year and up 6%. Still a great position to be in, right? There's nothing to complain. So if you're feeling a little jittery, I mean, come on, markets have been doing good. Just that getting like 12% up in 2 months, that is unusual. This is very usual. This is how the normal behavior of the market is. So I have no concerns about it. Looking at a fear and greed index, we are still in fear zone. So I'm not gonna go aggressive on my hedging right now. Okay to hold some deltas when we see little craziness in the market, when it moves into greed zone. That's a time when for me to be cautious and try to put hedges, increase the hedge on portfolio. And again, depends on where you are on your investment journey. You may or may not want to utilize hedges, right? So don't take it as a gospel that you always need to have hedges. Your objective could be different than mine, and based on that, you decide what you want to do with your portfolio. So at least this year, I just want to make sure that I don't lose the gains that I have. Obviously, that means you get completely out, which I won't, but at least try to reduce the losses in case market turns around and goes south. So I am trying to hedge my portfolio. So if market goes to the moon, I probably grow to the tallest tree and won't go to the moon because there is no free lunch. So if you're trying to hedge your portfolio, you're going to give something up, and I'm okay to give up some upside gains in the market for the protection that I want on the downside. So a quick look at the crypto side. What happened? Runes protocol went live along with the halving that had happened, and that's like a degen stuff. This allows you to start minting whatever NFTs, etc., which was earlier not feasible on Bitcoin, and miners love it. After halving, miners were actually made more money in fee than in the rewards, and the miners would love it because now the rewards have been slashed. So at least these changes, right or wrong, I have no comments. The purist or the what you call maxis on Bitcoin hate this thing because it's increasing the fee. But hey, it's a open protocol. Anyone want to build on it? it allows them to build on it, and miners love it because they're making a lot more money on this. So all the degen like stuff that you could have done that traditionally has been done on Solana and, and Ethereum's, I mean, now you can do it on Bitcoin as well. But uh, other news is there's a Bitcoin and Ethereum ETFs that have been approved in Hong Kong. They will start trading on Hong Kong exchanges from April 30th. Not going to make a huge difference because the market size itself is very small. Just the Bitcoin ETFs in US have more asset under management than the overall ETF in Hong Kong. But from a news perspective, from a story perspective, it's a good story to tell that these assets are now gaining legitimacy, at many places, even outside of US. US has been behind, but in ETF, Canada, Brazil, they were already had ETFs approved. US approved it, as you guys know, US approved it in this Jan, and now we're seeing Hong Kong also approved it. From a narrative perspective, this is as close to China being, getting comfortable with Bitcoin ETF as it can get. China had banned Bitcoin mining, I think 2020, and the government stance hasn't been that positive on Bitcoin, but now Hong Kong approving ETFs. That's from a story perspective, that's a good story. So we'll see. I don't expect any big impact of Hong Kong ETFs coming online on Bitcoin market as such, the way the US ETFs did. Stablecoin bill is being worked upon. I think I don't know, our lawmakers will ever eventually finish this or not, but this has been a story going around for many, many quarters. And what else I noticed? Stripe, which is presumably the most valued private company, or maybe the second most if SpaceX is the most, but I think Stripe is the most most valuable private company. Does everyone knows Stripe? Anyway, so if you're opening up a new online business and accepting payments online, probably you're using Stripe as the backend. So last remember was valued at $90 billion. I don't know what's the current private valuation is, but they're now back in crypto. Maybe 2 years ago, Stripe had announced accepting basically Bitcoin rails. You could have paid through Bitcoin. This time they're doing it the right way. Now they will integrate stablecoin into their toolbox. So if you're using Stripe to accept payments, if you're a merchant and you're allowing your consumer to pay via credit card, and you're using Stripe at the back end, now they can also pay via, I think they will be integrating with USDCs. So that was one news. The news that I love the most is the last one. So wealth advisors. So now the 13 Fs are coming out, and after the Bitcoin ETFs went live in US, now you could actually get some insight into are money managers or wealth managers, are they now warming up to these Bitcoin ETFs or not? So there's one screenshot I came across on Twitter around the Fidelity FBTC, which is Fidelity Bitwise Bitcoin Fund. So we were able to see some allocations from some wealth advisors, right? And surprising one. So generally, it says 1 to 2% is good enough, but we were able to see, 8%, 6%. Probably they are the little more forward-looking wealth advisors. But the funniest one was this one. This is United Capital Management, and they put in almost 6% of their client assets into these Bitcoin ETFs. And if you look at their management team, this is as boomer as it can get. So, well, so boomers are coming for DGens now. But this is just a drop in the bucket, I guess. I'm still waiting for the wirehouses to allow the wealth advisors on their platform as to be able to offer. I know Morgan Stanley, if you're a customer of Morgan Stanley, if you want exposure to it, you can tell your wealth advisor saying, I want exposure. But what I recently read was Morgan Stanley is very close to finishing up with their work with their legal and the risk management team to basically allow their advisor to go the other way around, wherein they can go and recommend it. So today, your financial advisor or wealth advisor, if you are with, let's say, Morgan Stanley or some of these other big wirehouses, they can't recommend you. They can't solicit from you saying, hey, we got this Bitcoin ETFs. Would you like to put some percent in it? They can't. Right now, they are not allowed because these big firms, they take few months and quarters to go through the huge process of with their legal and risk to approve first to review this new asset class and then to approve it to be enabled on their platform. So if you're expecting that the ETFs are coming online and it's, everyone should, like you and I bought it on the day one when it was launched, right? If you're a wealth advisor, you can't do it because you don't have a permission or risk team hasn't approved it. So I'm expecting for at least another quarter or two before we see a lot more, I would say, pick up all these Bitcoin ETFs because these wirehouses take much longer time. But I think Morgan Stanley is getting closer to finishing it up, basically the whole process of getting this approved. And that's when the real fun starts, right? Then you can see the pension funds and the insurance companies and the family offices and wealthy individuals start to see whether like it or not, the Bitcoin getting into your portfolios through these ETFs. So that's a news. What else? Republic First Bank. Yeah, I had like one regional bank failed. Like today morning while I was scrolling through my Twitter feed, I saw that one more bank has failed. But I didn't get into the details of which bank was it. But I didn't see it being talked about in financial media, but I saw it on my Twitter feed. Yeah. So higher interest rates, and now that's the whole story, right? Higher for longer. It's creating havoc on banks' balance sheet who have been holding treasuries. And I don't know in this specific case, why did they fail? Did they fail because of, the really bad risk management on execution side, or did they fail because they're holding treasuries which are underwater? But yes, I heard that one more bank had failed last week. And other thing is on I think Japanese yen. Like that's getting weaker and weaker against dollar. What? It is now 153 or 158 Japanese yen per dollar. Right? This is what happens when your country continues to borrow it. And when it comes to Japan, I think their debt to GDP is like 250%. Right? So yeah, I don't know how are we gonna pay all our bills, especially when the rest of the countries are not buying our treasuries in the same pace at which they were earlier were willing to buy. So good time to visit Japan. Yeah, I saw another news that Kyoto is dealing with a over tourism problem. So, James, you're not the only one. Looks like there are a lot of other people who now want to visit Japan because the currency has become much cheaper, right? It's like a 50% cheaper. So, generally, earlier I had seen the Bank of Japan would like to keep it closer to 100 yen per dollar. Now it is like 150 for what? I think maybe they lost the control. Who knows? But it's a sad situation. And Kyoto is now dealing with, I think there were two cities. There was an article which I read. There were two cities. One is Venice in Italy is basically they are now looking to impose a visit tax on tourists. So if you are there, if you're staying in a hotel, etc., then you won't have to pay for it, or those registered accommodations, then you don't have to pay for it. But if you're just visiting Venice day in, day out, a 1 day tour, you actually have to pay a visitation tax because they are dealing with over tourism problem. Yeah, exactly. Tax Euro 5. And I think in the same article I read somewhere that even Kyoto is dealing with a over tourism issue.
Vivek, every
Mm.
place has tourism taxes. If you take the MTR in Hong Kong, you go to you go between two stops, one to the border, which is like 25 Hong Kong dollars, which is $3 more expensive than the last stop. Uh, Otherwise, you can spend 9 Hong Kong dollars and go any place in Hong Kong, but that is a tax to go across the border.
Yeah, but I don't know. I mean, I've never visited Hong Kong, but this was like maybe they don't call it as a tourism tax or whatever. But this was like so many people are visiting these, especially after COVID, everyone wants to go out. Some of the cities are being overcrowded, and the local residents are kind of complaining.
Oh, excuse me, SFO. You take BART from SFO and you pay twice the cost of any other. I live in Millbrae, right? I pay less than if I go enter SFO BART, I pay twice the cost than Millbrae. So that's a tourism tax.
Yeah, but I think that's good. That's gonna stay forever. But this Venice stuff is, hey, they may be doing it during a certain period of time because they call it as a tourism tax, then they can take it off. I think the SFO stuff is gonna stay forever. Anyway, so there's a link which looks like Ramesh I shared. This site list option trading after hours. Did not know until Jay mentioned last week. Read pro and con for option trading after hours. Yeah, I don't even do it on after hours, but you have the link. Okay, that reminds me. What do you guys think about NYSE proposal of 24-hour trading? What do you think? It looks like, you know, we have nothing else to do after 1 p.m. in Pacific or 4 p.m. Eastern time. So exchange is like, why not do it 24 by 7? She says, yeah, he's good. No, I'm not. I'm not happy. I'm not happy. Maybe I'm a different kind of a trader slash investor. Come on, we need time to get off our screens and do enjoy life and do other things in life rather than sitting in front of a screen because it now straight 24 by 7. This is one reason why I don't want to do in futures is then I'll get stuck to then I'll spend a lot more time on my screen because futures stay traded 23 by 5, right? So James said that will create more bag holders. Yeah, so there will be a lot more trading, a lot more bag holders, a lot more money for market makers and exchange, but I'm not sure if it's going to generate more economical value, right? It'll be more of a the value transfer from one pocket to another, but no additional wealth creation anyway. Ramesh says only retirees who don't want to watch TV shows. Yeah. No, so I'm not a big fan. And the other thing is we don't really know that how deep uh, the markets would be in those. Can you imagine that there is no closing time. It's like company announce basically announce their earnings and stocks continue to trade. You really, I mean, I don't know how I'll get accustomed to, hey, this is where it's gonna, okay, I need to make a decision now because there is no closing time. Anyway, so yeah, my only thing is then right now I just get off at 12:45. Then basically there is no time. They're like you can always stay glued to your trading terminal, and that's really, really bad. I'm not a big fan. But we'll see. We'll see what happens. I think Robinhood is allowing 24-hour trading on some tickers already, but I don't think because exchanges are not open, so probably there are market makers with whom Robinhood works. And the worst thing is then that when you need this off-hour trading, Robinhood shut it down, that 24-hour trading on those tickers. That was, I think, was it when Israel and Iran, they had escalation in the conflict and there was an opportunities in the market. Robinhood shut down that 24 hours trading on those tickers. And I saw Twitter users complaining saying, dude, this is why we need this 24-hour trading. And Robinhood was like, oh no, I think they were a little scared that some of the stocks will be punished a lot because maybe the depth wasn't there. I don't know what exactly the reason, but I guess they didn't have enough market maker or whatever. I'm not a big fan. SPX is 24 trading on IBKR and VIX. Yeah, it'll be good for it will be good for exchanges though. I'm not sure it'll be good for your portfolio or my portfolio, but it'll be good for exchanges. So what did I buy or sell this week? Bought a little Meta after the Meta's announcement when market they gave up on Meta. I'm trying to refill my tank because I had a covered call spread which was in the money previously in Meta, and I had to sell some of my Meta shares. So I think I sold it at 480 or something. Now the shares were down, so I got an opportunity to refill my tank. And so that's one on Meta. I also bought INDA, a little small amount, just to get more exposure to India-based ETF. And then the third one that I bought this week is Adyen. Oh, Adyen, I'm going slow because again, you don't have options against Adyen, so there's no way to reduce the cost basis of the shares. But the shares were down like 15%, etc., because after earnings, the revenue was up 46%. But what market did not like that the take rate actually went down and the stock was punished. I don't think it's that big a deal because they got a huge, big new customer, and the big customers actually negotiate really, really hard. And this payment space is dog eat dog world. So I'm not surprised that their take rate is down. Right now, I want them to focus on increasing the revenue and basically go for a land grab in US. Europe, they're already strong. In US, if they have to sacrifice some of the margins or a take rate to onboard, huge customers, go for it. Whatever reason, market didn't like it, so they punished the stock. I added a little more to my portfolio. That's all I bought this week. And those who are new, I share this because we talk about stocks. So you should know where I'm coming from. What do I bought? What have I bought or sold on my in my trading um, for this week? This does not include options. So I didn't sell anything. All right. Any questions? Oh, cool. So quick update on the bootcamp. We are done with drill 2. So, and now this Wednesday, we're going to talk about moneyness, exercise, and assignment process. Those who have already doing options, This is not for you. This is a boot camp for those who are trying to get into options and maybe do it the right way. So we're gonna talk about what's ATM, OTM, ITM. How do you figure out if your option is at the risk of early assignment or not? How does the assignment process works? How come your friend got assigned and you did not, or the other way around? If you have sold a call at 100 and the stock is now 110, are you gonna get assigned tomorrow? So we're gonna go through the whole process in drill number 3. Those who are attending boot camp, I sent you an email with your homework. So thank you for those who responded with their homework assignments. So we're gonna discuss that, a little bit of that today. But those who have not, please finish your homework. That's the only way you're gonna learn. And submit it either in the boot camp channel of our Slack group, or just respond to that email. Right. So let me share this Slack group here. Guys, otherwise, don't be like me. I have till date, I've taken 4 beginner sessions in skiing. I go to, after a few years, I'll go to Tahoe and take a beginner lesson. I've done it 4 times because I never practice. Don't be like me. And that is why, at least in this boot camp, I am asking everyone, especially who are new, to go and finish your homework and send and share. And I'm going to review it and tell you what I think about it, right? Do it in a paper trade. So there is no capital at risk anyway. But you go through the whole process of dealing in options and learning. That's the only way to learn is to practice. Practice with the real stocks in the market. So please submit your homework, and so that we can have a little more real life scenario that we can track through the bootcamp. So I already scheduled drill number 3 on Meetup. So go ahead, if you want to join, go and RSVP and register for it. This link is for registration. When you go, you just register for it. It's free. So if you want to join that, you're all welcomed, but you will have to do your homework. Okay. So that's my only ask is spend some time and energy in learning about it. Okay, and do your homework. All right, any questions on bootcamp? Oh, I think I forgot. Who did I tell to remind me of something? Someone has submitted me homework and I told them, hey, remind me tomorrow. We wanted to discuss their homework. Can't recall. Who was it? Anyway, so maybe that person is not in our Saturday meeting. Anyway, so let's move on. What else did I see in the market this week? We got a new kid. Rubrik actually started trading in the markets. So remember, we had looked at Rubrik's IPO a few weeks ago. So now they priced the IPO at $32, which was higher than the range. Range was 28 to 31. So I looked into Rubrik and see $32 means what? So looking at $32, market is willing to give them 8 times the enterprise value for the next 12 months of a revenue, which I feel is little more expensive side, because median similar SaaS companies, their median valuation is 4.5 times their next 12 months revenue. So for whatever reason, market is willing to go all the way to 8x. And Rubrik actually is not even growing at 15%. And I know there is a little, you really can't put a right number on the growth because they're moving from their license revenue to subscription revenue. So the growth will be lumpy. In the most recent year, if you look at, they grew by 5%, right? because now the growth is being converted into ARR. So, but over, I think after a few years, once the migration happens, things will stabilize. But from my perspective, I think the market, the IPO was priced higher than comparables, other comparables in the similar space, because market has got more appetite. It's a, IPO market is now opening up, and there may be many investors who have been like, they wanted to deploy capital in IPO, and there were no chance that you didn't have any chance to do that in 2022. Market was dried up. Neither in 2023 it started to open up, not too much. Very few companies going IPO. So yeah, there is excitement in the market, and I think it started trading on, I guess, on Thursday. So where is it, Rubrik now? RBRK. RBRK. See, 38. So market loves it. The question is, do you guys like it? So you have to make your own decision. I've seen these initial pops many a times. So I'm gonna wait and watch. Especially things that I'm gonna need to watch for on Rubrik is their conversion rate and then their growth in their cloud ARR. So that will take some time. Until then, yeah, I'm patient. So you can make your own decision, but the market is ready. Market has an appetite to pay up for Rubrik. Any question on the Rubrik? That's a new company that went IPO. I think market is still waiting for some of those darlings for IPO. Stripe is the most awaited one. Databricks is another one. Those IPOs, I guess, probably will be blockbuster in terms of the the pop that we may see or the pricing at which those IPOs may come out, because those are like, market has been waiting for those IPOs, but I've not seen any news around that though. What else I saw? Yes. Again, I think earlier when we talked about that yield max, now we're seeing, these 100% downside protection, these structured products coming out in the market. And sometimes, so I saw this tweet on, yeah, I can't call it, whatever the X, what's the X stuff called now? I still call it Twitter and tweet. And then they call it something else now. Yeah. Supal says, for SaaS company, multiple of revenue 4 to 5 times looks very conservative. Isn't 8 to 9 times revenue average for public? So different. You need to look at, and again, I'm no expert in this, but I follow the expert in this, right? If you go and follow Clouded Judgment by Jamin Ball, who is a partner at Altimeter Capital, I think he does the best job of following SaaS companies and looking at the valuations. So if it's a high growth SaaS company, means growing at more than 40% revenue year over year, yes, 8 to 9 times revenue is an average median. Let me just bring that up anyway. Clouded Judgment, but Rubrik is not growing at that pace. So let's look at the recent one last week. He did the IPO anyway. So he also did IPO. That's cool. 6.5 times next 12 months for a business growing at 40%. So we don't just have to look at what's the median or average multiple is. That had to be put it in conjunction with the growth, right? So is it a high growth company? Oh, there we go. High growth median is 8.6 times the next 12 months, which is super what you mentioned, 8 to 9%. Mid growth is 8.2 and the low growth is 4x. And high growth is greater than 27%. Mid is between 15 to 27%. Low growth is less than 15%. Rubrik grew 5%. Even if you give a benefit of doubt that because of a conversion from licensing to subscription, we should maybe let's say 15%. I give them like 3x, that assume they can grow it by 15%. Still, it's whatever 9x currently is higher. Yeah, a Clouded Judgment is a great resource. If you're really interested in SaaS companies and its valuations as an industry, overall, it's a good resource. It says equities and .com/listings, you can invest in pre-IPO stocks. Yes, there probably is. I think equities and they sold. It's called Forge or something. But yeah, there are more than one such resources where if you want to invest in pre-IPO, I don't know why you would want to, but if you want to, there are nowadays there are these companies where you can go and deal in the second shares, right? I think there is another one called Second Shares Market or .com, something like that. But uh, right now, I'm not inclined towards investing in pre-IPO. Sometimes I do get a proposal for venture, some seed funding, etc. It sounds cool. It sounds sexy that I'm a VC. But remember, VC is like you need to invest in at least 50 companies to have some chance of making any money. Majority of the VC, they don't invest their own companies, right? So who cares? It's someone else's money. No, for me, it's my own money, so I don't want to invest until I can invest in 50 companies. And when it comes to pre-IPOs, you have a least amount of information available to make any good judgment. So I would rather, for now, I'll just stick to public companies. Some point of a time when I'll have my own island, maybe then when I'll have money to throw around, then I will probably go to the VC side of a house. So yeah, it's a good to talk in parties that I'm an angel investor, but most of the angel investors are probably investing someone else's money, not their own money. Okay, coming to this one, someone mentioned that, hey, I'm pretty fascinated by these product, which says you can have 100% downside protection and an upside to the 9.65%. I'm like, how is that even possible? Right? So I shared my thoughts, and this is probably my most read tweet. I'm not too active on Twitter, even though I'm trying to be. So basically laid out an example of how you can do it on your own. Like I said earlier, I'm seeing a lot more products in the market in shape of either coming as annuities or coming as the structured products or ETNs or even ETFs. Right. So I just shared in terms of how you can create your own, basically buy a put and sell a call against it. You can go out a year or 2 year and you can it's easy to do it. And that's where you realize that not majority of the folks don't know how to use options. So there were comments like, what kind of sorcery is this? Right. And then I think someone it's not a sorcery, it's just a math. All we're using is just do a math in which you can have 100% protection, provided you are willing to forego upside gains beyond a certain percentage point. Now, in this case, for till 16th Jan 26, I have 100% downside protection, and I can, with the potential of making what is 555 to 500 up to 10%. And if you're happy with this, you can construct this off for your own portfolio. If you're feeling little jittery about your portfolio, saying, gosh, markets are already so high, I want to get out. Don't get out, just use options to do and protect your portfolio. And you don't have to pay capital gains tax right now, because hey, if you sell it, you have to pay capital gains tax. Plus you get 100% protection on it. And with a potential to make up to 10% till Jan 26. If you go out of the market, your potential to earn if market continues to go high is 0. So some of this turned out to be my most read tweet, but or you could invest into some of these products, but that means you'll have to sell your holdings. And first of all, when you sell your holdings, you have to pay tax on it, and then you'll be investing a smaller amount in this. Might as well do it on your own. Okay. So I thought I'll share if some of you are interested in building your own product which will protect you from any downside. It's not impossible, but there is no free lunch. So the catch here is you have to give up some of the upside gains. But if you already made enough gains this year and you do want to have 100% protection, yeah, there are ways in which you can do this using options. Another interesting one, perils of chasing the cloud. So Brian Feroldi is a very, I think I would say, has got a very large following when it comes to FinTwit or retail individual investing. Way back, I think in 2021, he asked on his on Twitter, what company is worth less than 10 billion today, but you think it could be worth more than 500 billion in a few decades. So he picked up the top 20 stocks: Alteryx, Boston Omaha, Beyond Meat, Desktop Metals, Context Logic. So he picked up 20 stocks, and this is called Wisdom of Crowd. Someone actually did a comparison of or the performance of those companies, and those are like all down, looks like minimum 35%. So don't follow the crowd, guys. Don't follow the crowd. Twitter is good to generate the ideas, right? But before you put your money behind it, do your own study. Make sure that you are comfortable with the business that you're buying. It doesn't matter. A person could have 1 million followers. It doesn't mean that they are right in picking the company. Okay. Or they are right, or the thread is a little more responsible, they feel more responsibility when they're putting something on Twitter. So if someone has bought those 20 companies thinking, okay, you know what, I'm gonna spray 5% on each one so that I don't get too big on if one company fails, there we go. Like they're down 100%. Every company has failed in the 20 list, at least so far. To be fair to Brian Feroldi, he asked in few decades. So we'll see how many of these survive in a few decades. But they say, I just wanted to share with a lot of individual investors jumping in the market because the markets go hot. A lot of individual investors become more interested, and their main source of idea generation is YouTubers or Twitter subscriptions and all that. Great for idea, but don't invest just because someone who you follow has talked about it. You have to put in your work. Next one, thoughts on risk. So Howard Marks, his latest memo was out, which again talk about risk. I don't think I've seen any other investors being so thoughtful around risk as Howard Marks is and has been over years. So I did went through that memo, but this is not about going through the memo. But one thing that had changed my way of how I look at risk, that's what I want to share. Hopefully, if you find it useful, include it in your own thinking about risk on your portfolio. So generally, this is what we are told, right? With the risk, higher the risk, higher the returns, right? You don't want to have any risk on your portfolio, just stay cash and cash equivalents, right? Treasury bills, notes, bonds. If you want to get higher return or move further up on the risk side, your returns, you could have higher returns. Isn't this what we've been told or what we have read in for me it's many decades since I finished my school, but isn't that what we read in school? How to view risk versus reward? Any feedback on this, or what do you think about it? What's your thought? Higher the risk, higher the reward?
Hold on. I don't agree with that. Higher risk, high return. Um, no, I don't agree with that.
Okay, that's fine. Ramesh says yes. She says yes. So there's a different way to look at this, which is what I think I first read it in one of the Howard Marks book, and that really changed my thinking on how I look at risk. Um, it's not, and I kind of agree that higher risk is not always higher reward. The higher risk has more variability. So if you start looking at your risk and reward profile like this, it actually changes my thinking. So these dots represent, whatever the midpoint or etc., whatever you want to pick up, and these may be some standard deviation, right? So if you on a higher risk side, say the year is invested, consider it as a risk one. Higher the risk, higher the reward at a midpoint. Let me just say this. Let's pick this, right? So all goes higher, right? So if you start from here, higher the risk, yeah, higher the reward. These are the lines that we are familiar with. But what generally we don't think about is this the variability in the returns, right? Lower risk, you have a lower variability in the returns. So this one has the highest risk. That doesn't mean it's going to give you this highest reward. What it means, it's got highest variability in returns. Means what if you end up here, right? There is a slim possibility that it could end up here, or it could end up here. So when you start looking at your portfolio and think in terms of, gosh, I'm taking this risk. I bought this, let's say, risky investment in my portfolio. Maybe eventually 10, 20 years down the line, it may pay off. But in between, the variability in return is so high that if it on one particular year, if it down 40%, majority of the investors get scared out. And when they have these huge drawdowns out here. And the higher the risk, I mean, the riskier the investment is, it is because there's a huge variability in the returns. And even though eventually it may pay off, this via this line graph, you may not be even there to enjoy it. So consider when you're looking at portfolio, consider the variability in the returns and see how volatile the returns could be. And would you be able to sustain that volatility? It's not always linear, markets go up, but they go up with a lot more variability or volatility in their returns. And higher the when you look at the higher the risk, that doesn't mean the rewards are eventually the average, the rewards may be higher, but it go through much more volatility, and majority of the investors can't just withstand that volatility and are out from the market. So that's why if you go back and look at the statistics of, let's say, these mutual funds, and the ownership of those mutual funds. The mutual funds, especially the ones that deal in, let's say, the high growth or small and medium business in mutual funds, their average returns, maybe pick a number, 10%. Right? So there was actually a study on a mutual fund that we covered a while ago. But the investor in that mutual fund had on an average made only 4%. Even though the mutual fund has made 10%, the average investor in that fund made only 4% because they will get out at the worst possible time when the mutual fund is going through that volatility. So when I started looking at the risk from this perspective, it changes the way that you think about your portfolio and what kind of investments you want to hold in your portfolio. If you're not the one which can go through this volatility because, oh gosh, I need this fund or I need this portfolio to pay for my house down payment 4 years down the line, then and I picked up some stock which is being talked about that it's in the new market, it's trying to capture a new market, don't have much competition, but it's an unproven business. It will go to 10x, but it could also, to go through 10x, it may go down through a drawdown of 60%. And if that drawdown of 60% hits you when your payment is due, you will have to sell the stock at 60% and you won't be there to enjoy the gains. So think about the variability or the volatility in the returns when you're trying to construct your portfolio. It has helped me in thinking about the risk and how I want to allocate money to different type of risk profile of my investments, depending on when the need for those investments will be. Because even though eventually it may give me 10% return on like CAGR of 10%, but that doesn't mean that every year it has gone up 10%. Right? It could go more riskier, could go down through way more ups and downs, and you have to time or your need for that investment to pay off with the what kind of a risk companies that you want to hold in that investment vehicle. Thought I'll share because this was again, it's like Howard Marks he's a good authority on. I like his thoughts on how he think about risk. So from this memo, this was a punchline. Not being willing to take risk is an extremely risky strategy. This from the latest memo. Future is inherently uncertain. So we have to usually choose between either avoiding risk and have no return, right? Cash, it doesn't beat inflation. Taking a modest risk and settling for modest return, or taking on high degree of uncertainty in pursuit of substantial gain. But accepting the possibility of substantial permanent loss. So I think there was two Supal mentioned asymmetric nature of risk of portfolio turning zero also needs a lot more weight. PD says, yes, you pay increased risk premium as you go up in the chart. You pay a risk premium, but imagine if the higher risk always means higher returns, then we won't call them a high risk investments anyway, right? The reasons those investments are risky is not because they are high return. If they're high return, then they won't be called risky. It's because they go through much more, the variability of the returns is too much. One company in the similar risk profile could become 10x, other could go down to zero. That variability is what kills. The risk inherent in not taking enough risk is real. Individual investors who eschew risk may end up with a return that is insufficient to support their cost of living. So you have to take risk, but you need to understand without taking risk, there is no gains to be had, but you need to understand what risk exactly means and, you know, use that information to build your portfolio.
So, Vivek, you understand what you're doing and you minimize what you don't know. So, as opposed to me just buying uncovered calls, that was my stupidity. I thought I knew something based on no facts, and that was stupid risk, and that wasn't high risk, high return. Well, yeah, I hoped it was high return, but I lost it.
Yeah.
You understand this stuff.
So 3 things that have helped me, and this was that changed my mind when I started to actually dealing in options. It changed the way I started to think about markets. Uh, 3 words that helped me was to in my investing journey is I don't know. And that is why I love those options was because I start with the presumption that I could be wrong. And it was a very difficult way to invest, but it helped me to stay I would say not take undue risk, or even if I'm taking risky company to position size it accordingly, saying I don't know or I could be wrong. And that is why I generally don't buy options, because then it means I know that this is what market's gonna do. I know this is the stock that is gonna go high. That is why I buying call. If I sell a put, I'm still bullish, but I don't know. I am bullish. I have a high probability, but I could be wrong. So thinking in probability it's a skill that we have to develop as an investor. We should develop because markets are never absolute. When someone asks me, do you think it's a good investment or do you think the stock will go high? I can't give you an answer yes or no, because if I say that, that'll be wrong. Only thing I tell you, I think I have a more than 50% probability confidence that probably will go high. It's a probability. But it also means that maybe this time the like 40% will come true. The 60% probability may not come true this time. So stock could actually go low, even though I have a higher probability uh, of it go to high. So uh, start thinking about probabilities when you start to make your decision, and not in absolute terms. Shri, I'll come to you. I see your raised hand. It helps to formulate your decision making process, not just in investing, but in everything else. So instead of saying, I know this is what's going to happen, maybe I think the probability of this going to happen is higher, because that also means in the same sentence, I'm admitting that there is some probability that it may not happen. And then we'll think, okay, what would I do if that small probability of it may not happen? I won't go too big. When it comes to investing, I won't go too big. Or let's say if I were to drive down from here to LA, or like 10 miles out, I know, will I be able to reach there in whatever, like 10 minutes? There's a high probability, yes, I will be. But there is a chance that I may not be. So if I'm going there for a super urgent life and death kind of a meeting, then I'll think, okay, if I'm not reaching there, what's I'm gonna do? Make sure then I take that action right away. Call up someone to help me in case I'm not able to reach. So thinking, there's a book which I have to start. Once I'm done with the boot camp, maybe I'll start with that book. I have the book with me called Thinking in Bets. It's from a PhD scholar. She left her PhD to become a professional poker player. And then she wrote this book. I think she did her PhD from Harvard or something in psychology, called Thinking in Bets. And she was like a world class poker champion, Annie Duke. I've heard a lot about the book, but I want to read that book, which is like thinking in terms of probability in your life and business. And I find that dealing in options, it helped me a lot. All right, go ahead, Shri. Shri, you can unmute.
Yeah, I agree with you 100%. As I mentioned, yes, high probability will have a high volatility and high standard deviation. But if you're taking profit when you have a profit, that would minimize your losses on the downside. And again, when somebody says that if you don't know any, we don't know anything about the market, we need to assume that and take position and take chances. And when it has a profit, you should consider taking profit. Another thing that I might suggest is if everyone on this meetup, if they take a look at their account, see how many of them have profit, make a note of that, and 1 month later, take a look at it again and see if it has gone up or gone down. If you're taking out the ones that are going down, you're going to ultimately lose much more than what you would be making if you sell the ones that have already made the profit for you. Like the saying goes, taking profit does not, what do they say? Taking profit is, you're not going to lose your base or something to that effect. And my experience, again, I have gone through this. I've gone through 50%, 40% of losses, and I have stayed with the market, and it has returned very well for me. And of late, I'm trying to adjust my portfolio volatility to some extent, and that's making me a better investor at this point.
Yep. Thanks for sharing your experience. I think two things which you said are very pertinent. One is around how you have become a better investor by looking at your portfolio and performance. Maybe you do it month by month basis. Some may not be that active, so they could do quarter or maybe semi-annual annual basis. I think the other phrase that you were trying to get to was that no one has gone broke taking profits. So
Exactly.
I used to subscribe to that, but of late, I am trying to move, because what I did when I used to subscribe to this philosophy, sold some of my winners because, hey, those are made money for it. But then slowly I started to realize that the stock did what I wanted them to do. Then why am I punishing that company by disinvesting or de-investing from them? If the company,
Vinny,
sorry,
people say balance your portfolio, and that's bullshit. I mean, at least I don't understand other stocks. I just should have held on to Microsoft and not bought anything else since 2006. I'd be a millionaire,
yeah.
but
So
I'm not because I was listening to the street wisdom, balance your portfolio.
so
It's
balance.
ridiculous.
I agree. Balance of portfolio, everything works if you are not active. So there's a difference, right? So I used to be of the same stuff in terms of no one has gone broke taking profits. And of course, it also helps me balance my portfolio because if the one stock has become much bigger, I take profits on it. It reduces it rebalances my portfolio automatically because I've sold a big position.
Well, excuse
But
me. Kramer says, "Don't be hogs. We hate hogs." But look, if I was a hog on Microsoft, I told you I'd be a millionaire
yeah,
rather than diversify. So he says, hold on to winners like Nvidia and Microsoft, but don't be a hog. So what the hell does he mean?
yeah. So Kramer gets paid $5 million to get the eyeballs on their mad money, right? He doesn't get paid because you made money. And nowadays he has his subscription. So I don't subscribe to whatever Kramer says. He changes his tone based on how the market changes. So I've seen him flip-flop on stocks as well as crypto many times over past few years. So I don't even know what he means. But my personal experience has been I was of the Sri, I used to subscribe to the same stuff. No one has gone broke taking profits when I was not closer to my investments or the companies that I hold. That doesn't mean that I'm gonna let any company become 15% or bigger individual company. But now if let's say some of those positions that have made money for me and I still see business performing,
Active.
I'm not selling it. So yeah, off late.
Again, Vivek, I do monitor my portfolio, and if you can monitor more frequently, you will have much better idea.
Yeah.
The other thing that I do is to compare myself to S&P 500, and my portfolio has done better than S&P 500. I'm not sitting holding some of the positions forever. I do hold a position for a longer time period, but that is a core position. But apart from that, I do trade frequently up and down with options, without options, and do whatever that I need to do for my portfolio. And
Yeah.
again, managing your position is the most important aspect over there. How you manage it is up to you. That is your decision.
True, completely agree. Managing your positions, I think each individual have to figure out what's the right way that works for them. Minimize loss from what you don't know. Yes, probability improves if you follow your personalized trading rules. Yes, I think everyone eventually becomes comfortable with what they, uh, what that, how either they trade or how they structure their portfolio. Yeah, so don't sell winners to save loser investment. Yeah, that's another saying, right? Water the flowers and cut the weeds. And trying to rebalance a portfolio might do the other way around, wherein we cut down the winners, take profits, and then add to the losers to rebalance it because that has gone down. So yeah, there are different theories. All are good from an academic interest perspective, but I guess you have to figure out what works best for you. So like I remember, when I started becoming more active, I did not have so many of a long stock positions, right? Mostly it was like premium selling. I only had ETFs. And as and when I started becoming more comfortable, understanding more about a company and business, and when market started presenting more opportunity, that's when I started to build my individual stock positions. And then I didn't do many of the standard option premium harvesting trades that I used to do. But I did it only on like 12th of April when market presented opportunity. So that animal spirits, that rekindled in me. I'm like, gosh, I've never done those trades or these stickers. I've not looked at these stickers for the last 2 years, but let me do it now. So I was thinking like yesterday, maybe I should, now the VIX is like above 14, 15. I should go back and do some of those premium harvesting trades. I have no intention of owning those ETFs, right? Those are just from a perspective of harvesting premium. Like Shri, you said that there are some tickers on which you just trade. I was like, yesterday I was thinking maybe I should do more of those because the ones which I did on 12, they all turned out to be, decently profitable. And yeah, I was thinking about it because over the last, I would say, year and a half, all my option trades are in relation to my long stock portfolio. I have very few I have done wherein I'm just trying to harvest premium, right? And has no other objective behind the trade. So I was thinking maybe I should go back to that. Subal a future session can look over the company. It's a numbers from directional hypothesis. Other words, how you track long-term bet. Apply premium selling as another layer. So premium selling, I'm already covering in options bootcamp. right? In which, so we already talked about if I want to acquire a stock, how you can sell a premium and acquire at a lower cost basis. If you want to sell the stock, how you can sell third call instead of maybe sell a call, get a premium. We're going to look at, even if you don't want to buy or sell, I think in the next session, we're going to talk about strangles, etc., in which you are neutral, and which is what most of the time I will do is you're either neutral or slightly biased, is just sell premium to reduce the cost basis. So so this is what I'm covering in the options bootcamp, Supal. So join over there. Good. That gets into the details of options. And in Saturday session, we have like all type of a crowd, and it might be too much for some of the folks. Okay, all right. So now the last one is earnings. Let me go through some questions. Can we look at Mercari.com? Isn't Mercari was a networking related security company? I do sell products there, and it's a Japanese company. Import your eBay listing to Mercari over 30, but not a rock bottom. Any question? Can you show us possible best way in toss to play Amazon earnings on 430? Oh, Mercari is eBay. So I think the Mercari, which I was probably getting confused, was a different one. MCARY. So this looked to be a pink slip ticker. So no options against it. So that's why it's not on Finviz. MCARY. Geez, let's look to wow, from $31 to 5.49. It's not on Finviz, so let's see where I can get some information for MCARY. Okay, they don't have it either. Where can I get some CAR? Query financials. Yahoo Finance. So are the increase? So EPS is coming down again. It's don't they do a better job of providing me percentage? Do you anyone else knows a service where you can get this pink slip shares? $6.32. They have done better on the net profit. Previous year's quarters. Oh, sorry. This is an annual one. So from a business side, again, I don't have too much of a data around this. It's only what 3 or 4 years worth of data. Total revenue has been increasing. Operating revenue, and find how about their operating income? Pretty choppy operating income. Some years it's turning positive and negative. EPS is positive, much better than what we have had in previously. What do they have? What else do they have? With the balance sheet. But these are all Japanese yen. Numbers are too big. Oh, totally. Okay, so they do have a huge amount of a debt. Almost 131 billion yen cash flow. Are they able to generate some operating cash flow? No, I don't like it because operating cash flow is negative. So after all they do, revenue increased, great. They're able to increase their EPS because they've taken some non-cash did not take some non-cash expense. But if a business cannot generate operating cash flow, that limits their options of what they can, what they can do. So if they have to grow, they have to either sell shares or they have to take on more loans. Right? And so if I were a new investor, probably I will not pick this company. Now, if you were already invested in it, and number two, this is not optionable because this is a trades only on OTC. I can't reduce the cost basis in this. So I'm depending on how the market reprices this. And unfortunately, none of the Finviz doesn't cover it. Stock analysis doesn't cover it. I'll have to see if Koifin has something of this or not. But getting to the right information itself is difficult. So yes, I'm not interested in this. Did they how much is stock-based compensation? Oh, this is a Japanese company. You may not even see more stock-based compensation. Yeah, so no operating cash flow means they can't generate cash running their operations.
The numbers that you're seeing is in Japanese currency.
Yeah, these are yen. But in any case, whether it's yen or dollar, it's consistently, I mean, they were earlier, but now I don't know. Again, I haven't looked into the business yet, but just looking at the numbers, that something has changed around in last 2 years, that they moved from actually generating some cash through their operations to negatively. And over the last 12 months, it's becoming even worse. So given so many facts in this, I won't be interested in this. So Freddie, that's my 2 minutes analysis on Mercari. Another question here, how do you toss to play Amazon earning on 430? So when I used to do earnings play, and it's like almost, I think for my first 2 or 3 years of my options, I used to do earnings play. I don't do it anymore because I eventually realized that when you track my, how much did I make or lose on earnings, eventually net it out to be even. It was a great tool to stay engaged with the market because it forces you to stay engaged if you're doing earnings play. But then anyway, I figured out other ways to stay engaged, so I stopped doing earnings play. But my favorite earnings play used to be, if it's a high price stock, then individual stock, then I'll sell a iron fly or I will sell a iron condor on the stock. So that used to be my, if I don't own the stock. If I own the stock, then it will be a different one. Or maybe I'll sell a put if I want to buy it more, or depending on the outlook of it. But when it comes to pure play earning trades, my standards would be iron fly or iron condors. So if I were to play, let's say Amazon, and the market maker move by next week is like 12. If I go and see how much has Amazon, okay, I don't have that info here, but anyway, so market maker move is almost $12. or by this time it's expected to move maybe $13.50. And if I'm delta neutral, means I don't have any bullish or bearish idea or thesis on Amazon. Then I'll go to 16 delta out. So 165, maybe 155. And out here, go another 16 delta out, 126. Okay, I'm not gonna do this. Then maybe 12. It may be difficult to roll otherwise. Oops, what happened to the other one? 165, 155. You know, not 207, where did I sold call at 200, then it will be 210. Which is my 16 delta, 12 delta. Yeah, this should be 210. So have a balanced run counter. So that makes it a what the heck? Show all. Did I do something here? Was it not showing me? Sold 200, bought 200, sold 165, bought 155. Yeah, that's iron condor. Why the P&L graph is not showing up?
You unchecked the position. There you go.
Oh, I unchecked this one also. Oh gosh, stupid mistake. No, I still have, and that does not helping me. What happened to? Oh, I'm way far away. The pricing was so okay. There we go. So this would be my standard. Again, I don't do these earnings trade anymore, right? So right now it says 92.5% probability of profit. So eventually what this means is if Amazon stays between $201.97 and $163.13, this will be a little bit of a profit. This will be profitable. If it stays between 200 and 165, I have an opportunity to make $193 at a investment at the capital at risk of $1,000, which is almost 20%. And maybe I will close it when I'm making close to $100. So that's how when I used to do these earnings trades, that's how I used to frame it. But then you have to look for how much Amazon have moved in previous earnings. Market makers are right now expecting it 12%.
The highest amount of price change after earnings was 13%. So that brings the upside target to 203. So your 200 and 210 might be in the money at that time if it does move to 13%.
Yeah. Yeah, if right now MMM says 12.2, but yeah, you may be right that highest it moved 13%. Who knows what could happen in this one, right? Like Google moved 10% plus and Meta fell down 15%. I remember Meta moving up 25% prior to that. So net, I don't like, I realized after doing it for 2 to 3 years that I didn't see needle moving changes in my portfolio because of playing earnings. And if I were to do earnings trade, I'll do it right before the earnings day, right? Just one day before it, because then your volatility is maxed, your premium is, your IV is juiced up, you can get a maximum premium by selling that option, and then close it after the IV crush happens, right? So these are like purely from trying to profit from IV crushes and nothing else. So let's say if I show up corporate actions, right? So the whole idea of doing option trade is to take advantage of this crush in IV. This crush in IV. Doesn't matter stock goes up or down. Only thing which always happens after earnings is that the IV get crushed. Right? In this case, the stock has gone up. In this case, the stock has gone down. In this case, the stock has gone up. I don't know what might happen the next one. So, but only one thing which I know is that IV will always go down. And this is basically a IV crush play. But if you're buying or selling calls or puts, then it becomes a directional play, which I generally don't want to do. You don't know what the stock might do after earnings. All right, let's jump on to some earnings, and we'll stop whenever, maybe at 12:10 or something. May not be able to finish all, but there are too many earnings anyway. So, so let's start. Which one we want to go first? Where's my document? So many windows open. One sec, guys. There we go. So let's start from this week ones first. Let's see which document I have open already. Let's start with Snap. Snap is already open. Let me just start with Snap. So Snap is one company that is like, what do you say? There are three things certain in life. One is death, taxes, and Snap going down after earnings, right? That's used to be a standard that it will always go down after earnings. Not always, majority of the times. But this time Snap surprised everyone. It was hugely up after earnings. So looking at the earnings, the revenue was up 21%, gross profit up, gross margin up, operating income was up as compared to the last year. They beat on revenue, they beat on EPS, and they also beat on their daily active users. Market loved it. So if you're looking at a longer term quarter to quarter basis, 21% up. What I don't like in Snap is operating income is still negative. So despite Snap being around for many years, they haven't yet figured out how to make money from the business. And this is why I can't go big on this business, because they haven't yet figured out how to make money. Because the revenue was up 21%, and there was another one. We look into business KPIs. So I would say still a good business model, but it's a bad management. Management can't figure out how to make money. So looking at some of the business KPIs, things that you need to focus on is, number one is the Snapchat Plus users. That continues to grow. So they added this paid subscription in 23 Q1. So, and it started with 3 million and now they are like 9 million. So it's almost 200% up. It means they're actually building something and that users are willing to pay for. It's not free one, right? What management mentioned was that AR engagement was great, whatever that means. Ad rates were up 8% year over year after many quarter of declines. This is what market got excited. Your revenue is up, your daily active users are up, and your ad rates are up. And that's like a good combo. What I didn't like is they don't talk about my AI chatbot anymore. They introduced this new metric with much fanfare when AI last year, and they share these numbers for 2 or 3 quarters and they don't share it anymore. And now they have added a new metric which is called Snap Stars. How much of engagement with that? I hate companies which keep on changing metrics based on whatever is working for them in this quarter. So for that perspective, I don't like I don't like when Snap don't talk about my AI, right? Their guidance for next quarter is 431 million daily active users. Guidance revenue midpoint is 1.24 billion. And they guided to adjusted EBITDA, positive adjusted EBITDA. First of all, it is EBITDA. And if you hear Charlie Munger, he says EBITDA is BS, right? And now on top of it, they have done adjustment. And hence they are able to guide to adjusted EBITDA of 30, probably the first time, which got market excited. Capital allocation, they repurchased 21 million shares. So before you become too happy about it, it is just to reduce the impact of stock-based compensation. So Snap is one of the worst examples when it comes to stock-based compensation because they gave so much, they've been burning or they've been diluting the shareholders by offering lot more stock-based compensations over previous quarters. The other one was Palantir. So one investment thesis for me on Palantir was I want to see reduction in stock-based compensation. So they did that, and now Snap still, they have also started to reduce their stock-based compensation, but it's still like they issued 263 million new stock, and then they bought back stock worth 235 million. This is just to reduce the impact of their stock-based compensation. So don't read too much into it. All right, looking at some of the trends, revenue is fine. I mean, quarter last year compared to increased 21%. Operating margin, I still hate it. Last 10 quarters, no operating margins. Stock-based compensation is coming down, but still more than 200 million. Never made a net income. Business side, Snapchat users, I love this. And I also like it that their rest of the world monthly active users are going up. More importantly, their ARPU for the rest of the world is one of the highest, that they are able to monetize the user base in the rest of the world. So market reaction was up because both the 21% increase in revenue, increase in the active users, they were both above the guidance that Snapchat has given. Stock is now up 25%. Does it deserve to be up 25%? I don't know. I think this is overreaction. Like it always happen, overreaction on both sides when it goes down. So similarly, this, like I said, always it used to, the stock will be punished after earnings. So I guess there may be a lot of people who must have short this. Now there is some short covering maybe going on. My conclusion is, so based on their guidance for next year, they're guiding for 15 to 18% of growth, which is lower than 21% of growth. Not that it matters a lot for now, but I'm not going to go back and, become bullish on this stock right now. I already hold this. I've been reducing my cost basis. Now it is above my cost basis, not above my initial stock purchase price though, but is above my cost basis. And I think I have a covered call at 13 and 14. Both are in the money. They were both in the money, I think 2 quarters earlier also. They were called away. I sold put on them again. Stock came down. I bought back the same quantity again. Then again sold a call against it, basically trying to wheel the same amount. It will get called away. I'll be happy to let those shares go. I'll sell a put again. I'm not increasing my exposure to this company. I want the company to prove me for a couple of quarters. I mean, these one-time ups and downs I've seen many times on Snap. So not getting too excited about this 25% jump. So if you were planning to move into Snap because the stock jumped 25%, maybe I suggest some patience. and see, is it only one time or have they figured out how to actually do the business properly? Another thing which I didn't like about Snap is they changed who they are. So if now they became a technology company again. They were camera company. Now they're back from camera to technology company. So anyway, that's Snap. But I'm not selling out whatever small amount of shares I have. This is like one of those risky investments, right? The variability in returns could be high. Stock could go down like 20%, 40%, or it could jump up 40%. So my position size, I'm sizing it accordingly and just selling premium to reduce the cost basis. And it's not too big part of my portfolio anyway. So like a smoke insurance, I'm willing to wait. If management doesn't do anything, goes down to zero, yeah, I'll be hurt. Maybe I'll be pinched a little bit. It's less than 1%, so it really doesn't matter. Cool. Any questions on Snap? TikTok ban may be helping too. Every time there is a TikTok, I think I posted on Twitter saying, Snap, please do something on your own. Every time there is a TikTok ban happens, stock will jump 5%. Yeah, that also may help them. But that's not I mean, if you're looking for a new stock ticker, I think there are better tickers out there than to invest in Snap. If you are already own Snap like I do, I don't have to get too excited about this 25% move and increase the position. At least I'm not increasing. So that was Snap. Let's pick up which else we want to go for. Which other one I have already? Let's go to Alphabet or Google. Let's go Google. Alrighty, Google. Revenue was up 13% to $86 billion. Gross profit up 20%, margins are up, operating income is up like 30%, and operating margin up another 3.58%. What I loved is like net income is of 52%. What the heck they have done? Anyway, I think it's because the restructuring charges not that much as compared to the last quarter. So majority of them is green. Operating cash flow was down because of the investments on buying a lot of those chips. So operating income was up 30%, like net income 52%, like I said. Long-term liabilities are down. I mean, there is nothing that is too great or nothing that is too bad. It's just doing what it's supposed to be doing, right? What I like, a total share count has reduced by 11% because they've been buying back their shares. So that even if I don't increase my position, I've got a higher percentage of companies' profits for me because they bought back shares and reduced the overall share count by 11%. Right? Let's look at the two things which are important for Google's future. One is Google Cloud, and why market got excited about Google and stock was up like 10% is number one, they're getting $1 billion to operating income, and Google Cloud actually grew 28%, right? Which is higher than how they have grown in, I think, last couple of quarters. So market got excited about that. Number two is YouTube was up 21%. If you look at it, comparatively, YouTube growth had also in the previous years, YouTube growth, I think I do have a data, right? Yeah. So YouTube ad growth was 15%, 12%, 4%. It actually grew down 14% whole of 2022. And then, so it was like a mid-teens. Now it's back up to 21%. That's what market was excited about. So Again, now YouTube is what? Almost $30 billion business, YouTube ads. So third thing, um, dividend. So Meta had declared dividend. So how can Google stayed behind Meta? So they also declared dividend. I don't think they had to, but when you declare dividend, you start to get into some other, additional portfolios. Retirees may want to own your stock. So basically, it increases the attractiveness of the stock for some, additional investors. So they declared the first time ever they declared dividend, and also additional $70 billion share buyback plan. So YouTube back in growth, additional 70 billion buyback plan, and declaring cash dividend, and the fact that they grew their revenue by 13% means AI is not eating its lunch. It means Chat GPT, everyone is not abandoned Google and now gone to Chat GPT to search for it. Pranav, that's one concern was, does those 10 blue links have any relevance when we have these LLM models? So far, Google says, yeah, we're gonna use AI for our own benefit. They've been able to grow their revenue by 13%, guys. So that whole pessimism, because there was a pessimism in the market around AI eating Google's lunch. Now Google, at least for this quarter, they proved them wrong. That's why we see a positive reaction to the stock. So now this is what Sundar Pichai has to say. We are well underway with our Gemini era, and there's a great momentum across the company. Our leadership in AI research, infrastructure, and global product footprint position as well for the next wave of AI. Yeah, they have had those starts on AI 3 or 4 times, but you just can't write off Google so easily. Right? And nothing to complain about when it comes to how, historically how they have been doing, right? 30% operating margin. Snap is like negative 30% for all the quarters. Revenue growing up nicely. Net income is nicely. EPS is all up. So yeah, there is like nothing to complain for. Oops, double. Nothing to complain on Google. So my conclusion was Google has demonstrated that AI so far has not disrupted it. Yeah, there's nothing much. I'll continue to hold my position and add as and when get some opportunity, right? And market has presented us with those opportunities to add Google, because on some fine day, just because maybe Microsoft or maybe Nvidia has not done well, market will punish all the tech companies. Yeah, you can go and I have went ahead and then picked up some Google at that time. So I'll continue to add at opportune times and reduce the cost basis. That's Google. Which ones want to pick up next? What else I have? Any questions on Google? Let's do this Facebook or Meta. I think I updated, yes. Let's look at Meta. Buy GOOGL or GOOG? I don't think it matters much. I initially bought GOOGL and I've stayed with that. Is there much difference between these two? Frankly, I'm not even looked at it. GOOGL. There is a little bit of a price difference. I don't know which is more liquid. Anyone else have a thoughts on this? What's the volume on this one? Or this will tell me the volume, right? Today's, let me see the open interest. Let's go to the This also seems to be decent one. So these are different class of shares, A class and C class. So I don't know, maybe there is a difference in the voting rights. And if that matters to you, then you should pick up accordingly. Between A and C, I don't know if they're like does A has or C class has a higher voting rights than A? I don't know. I've not looked at that. But you can pick up. So from a liquidity perspective, what I was looking here is from an option liquidity perspective, I think I find a lot more open interest on GOG, a lot more. It's little better than GOOG from option liquidity, but even if you have GOOG, not the worst thing in the world, right? Still, I think those are, even this is also liquid enough. All right, so what are you doing on XRP? Okay, I'm not even gonna want to talk about these crypto pumps and dumps. You want to buy XRP, understand why you want to buy XRP. What are you getting into? Is it a decentralized one? Is it a centralized one? Are you worried about the fact
No,
that
it's not about that. It's about the one Coinbase has a XRP is giving like 52 cents, and then the other crypto exchange is the cost is 32 cents. So I just saw an interesting play there. So I didn't do it. I wanted to do it, but I just say that.
yeah, make sure when you transfer the dollars, you actually can get those dollars back or that XRP back. Yeah,
I'll just I'll do the transfer right away. Like
yeah.
transfer from one Coinbase to the Coinbase, like one exchange to the other exchange, and convert back to the dollar again. So
Cool.
it's like a round trip basically.
Yeah. I mean, that's what this guy Sam Bankman-Fried did at a Jane Street, right? All he was doing was trying to exploit the differences between Bitcoin prices on various exchanges. That's what he wrote the software for. And then obviously he left Jane Street and created FTX. And then we know all about FTX. But I mean, you could exploit these differences in the exchanges, provided you're not hit by the, number one is the fluctuations in the underlying itself. Number two is the exchange rate. So yeah. All right, let's go down to Meta, and that's the last one. And then I'll hang around maybe for 10 minutes for any other questions or what else we want to talk about. So Meta headline numbers. All looks good, man. Look at operating income was up 91%. Right? Revenue was up 27%. Like, it's already a big company and still generating the revenue like 27%, gross profit up 32%, operating margin up 12%, net income was up more than 117%, more than 100%. Cash flow is up 37%. So not that all income is coming from accounting income, they're actually generating some cash as well. So impressive. So they beat the revenue, they beat the EPS. When a beat means the analyst estimates, the consensus estimates of analysts. It was a very impressive quarter for Meta. But you won't feel it if you were just watching the stock price, because the stock got punished real bad. And looking at, so we'll come to the stock reaction later. So yeah, I don't find anything wrong in Meta's current quarterly results. Now, if I look at their some business KPIs, family DAP, daily active people, means these are the how many users on daily basis log into one or the other properties of Meta. Facebook app, WhatsApp, Instagram, Threads. What else do they have? I think these are the four big ones. They have 3.2 billion people, and it grew 7% year over year. I think last quarter when we reviewed it, I'm like, they already gotten probably everyone who has access to internet. We have what, 7 billion people, maybe 8 billion on Earth, and 4 or 5 billion people may have access to internet. Again, I don't know the numbers. Maybe I should. Maybe I'll probably find out and put it in this document. I should know. Today I don't. Let's say assume 5 billion people have. Out of which 3.2 billion are actually using Meta. Right? And they can figure out, and they actually grew by 7%, right? Which is amazing. Also, the revenue that they were able to generate was up 18% year over year. Right? So there is, from these perspective, great quarter. Things that are not good in the quarter, which is not good even in a previous quarter, is Reality Labs. It continues to burn money. I think they probably have now burnt more than what, $30 billion in Reality Labs, which is their, that was the reason behind the change of the name in the company, which is now called Meta. You want to live in metaverse. So whatever the Oculus headsets and all the software that they are building for us to be ready with metaverse, that continues to lose money, right? And this quarter only $440 million worth of sale, which is like nothing. It's an insignificant revenue. It's a huge investment that Mark Zuckerberg had decided. And remember, in 2022, when he came up with this idea of investment, stock got punished, brought down to $90, or maybe I think the lowest was $88. And he's not giving up on it, and he's continues to invest. So this quarter they lost $3.8 billion operating loss on Reality Labs. Right? So guidance for the next quarter is 18% growth in revenue. This quarter there was 27% growth, so a little bit less. And now this is where the fun part comes, which is what the street killed. If you had just known what Meta has done, like, great company, stock should have been up 20%, right? This is where the stock got hammered. They gave the full year 2024 expenses guidance 96 to 99 billion, which was updated from 94 to 99. Right? Number two is CapEx. Like, this was the overall expenses. CapEx, they said, will be in range of 35 to 40 billion. Earlier, the range was 30 to 37 billion dollar. Market killed it because you're gonna spend a lot more money on in next year. He's back onto his capital expenditure bandwagon. Market didn't like it, and this is the reason why the stock was down 16% or what, right? They did a share repurchase. They also paid a dividend, right? Now even boomers can own the stock. It does pay dividend. And management was very particular about doubling down on AI, and 50% of the content on Insta is not driven by AI. And he also mentioned that the Reality Labs is also helping, the work done in Reality Labs, we can reuse on our AI initiatives, right? So I'm not going to go through all the details of this. Overall, if you look quarterly trend and all that looks good. Like I said, Meta already is pumping money into Reality Lab, in which we don't know whether it will pay back. If it will pay back, when it will pay back, we have no idea. Even Mark Zuckerberg has no idea that metaverse will eventually be real or not. Now, similarly, he said something about AI with no defined payback period. So, like I said, Mr. Market went just mad. He was crazy and punished the stock. Stock was down 16%. And along with it, it took all other tech stocks down. So what's my Naresh says, damn if you don't innovate, damn if you invest. Yeah, exactly. Right. Conclusion, the bar was really high. Stock has been up 130% in 52 weeks. Market did not like the higher expenses, and the revenue midpoint guidance is like 18%. Stock, I think Street was expecting 19 or 20%, whatever. So what I didn't like is they stopped reporting some of the metrics. I hate these companies when they stop reporting some of the metrics. They have not shared DAUs and ARPUs for Facebook. And now they changed how they defined ARPP, which is like average revenue per person for all family of apps. They've changed the definition of this, right? Now to go back and figure out what's the difference between the previous ones and now what they call as ARPP. I've not spent time on that one, but I hate when management do this. They increase the work for investors, right? And now I was trying to figure out what happened to the Facebook, that blue app. They have not shared any numbers related to this. They've taken it off their slide deck. So if it needs to be leader in AI, it will have to spend. Right? So I am not mad at why are they spending. Many companies go through the same stuff. Amazon went through the same stuff when they were spending in building their logistics network and the network of warehouses. You need that spend if you want to play in AI. If you don't play in AI, market will punish you. If you play in AI, market will punish you because why are you spending? Come on, how can you become a leader in AI if you don't have all those GPUs that you need to run your training models or for inferencing, right? So that's why I picked up some Meta stocks when market punished it. And based on some of the words that Mark had said, and again, this is my wild speculation, and the fact that Reality Labs has been losing money quarter after quarter after quarter, and market doesn't like it, maybe they'll stop showing this. But again, just my guess. Maybe they'll bundle it, this whole Reality Lab, the information, brush it under the AI initiative itself. Because if I were the CFO of this, I want to get Reality Lab off my back, right? That's like a sore thumb in the rest of the quarterly results. They keep losing money quarter after quarter. Maybe if I can somehow figure out a way to say that's some money spent on AI, market will, not punish me for blowing money on Reality Labs. So I don't know. It might suit some, like I said, it might suit some frayed nerves in the investing community. Have to say, that's just my wild guess. So overall, man, I don't see anything wrong in the long term. Short term, yeah, there will be headwinds because he planned to spend a lot more money on to build up AI capabilities. They recently released Llama 4, which is like, way better than some of the existing models that are there. And I guess, and Meta has, anyway, they've done it, they've open sourced their AI model. And if you go back in the history, open source software in a long term, they win. Why Linux the most preferred software for OS for deployment across the world's data centers? It's open source. Innovation happens much faster. Right now, Meta is probably the only company, but I guess the adoption will grow, and we might see more and more innovation on Llama. So that's my thoughts on Meta. I found that 16% drawdown as an opportunity to get it back some of the stocks that I had to sell for covering my call spread. So well, that's fine. Sold at 480.77 and bought some back at 430. I'll do it. So that's Meta. Krishna said, John, like, did you cover CMG? I think we spoke CMG on. I didn't cover the earnings of CMG. I don't think I prepared earnings for CMG, but there were in some other context we talked about CMG. So that's all for earnings 5 minutes. We're gonna hang around and then let's call it a day. We're already 27 minutes out over the time. What else? Any other new thing? Oh, you're welcome, Sam. You're very generous with your words. So my focus for the next week will be to, of course, long stock position, nothing much is gonna change. We'll continue to look at the earnings. Oh, I didn't put next week earnings in the doc. So let's go and look at next week earnings. I think I did. I took a screenshot of it and I also marked it, but it looks like I forgot to add it in the doc. Where's the next week's earnings? So what's happening Nah. So looks like Monday is cool. PayPal on Tuesday. And Tuesday afternoon, Amazon, Supermicro. I want to see what's I mean, I don't own Supermicro and never owned Supermicro, but I do have and these are only two trades I think I've done in which I bought options in this year. This is basically bought a put spread till I think it's 26 or something like that. But interesting to see how a company with very low margins, how the stock can be priced at this wherever it is right now. But what else? Wednesday seems to be cool. And then the Thursday is we got an Apple, we got a Block. Yeah, I don't own Coinbase. Yeah, so I think it is evenly distributed, unlike this week wherein everything came up. All these couple of tech companies came up all together. So we got Amazon, we got Apple, another two big tech giants reporting earnings next week. Oh, Pinterest. How can I forget Pinterest? So Pinterest is there. Yeah, so 5-6 companies that I own in my portfolio is reporting results. AMD is reporting. I don't own AMD. So probably I'm not going to do this, collect this deep information, which I do
Vivek,
for other stuff.
people that aren't into NVIDIA, I briefed an article that the government is buying AMD now because they missed NVIDIA.
I mean, so right now there are not, I think,
Government workers are buying AMD because they miss NVIDIA. Sorry, specific.
oh, whatever. I mean, everyone thinks that AMD is going to be next NVIDIA or whatever other new chips going to be next NVIDIA. No, we have to see. Right now, I think all these chip stocks are super pumped up because of AI. So I have no comment on what other may be thinking about AMD. How much is so I've now looked at AMD. So revenue growth year over year was down. Actually, they didn't grow in 2023. That sounds strange. Uh, so was the net income. So was the EPS. How come? Okay, let's look at a quarterly. Yeah, so I think last two quarters they were okay. How about their ratios? Yeah, you have to pay up a lot. Price of free cash flow 200 plus. You have to pay up a lot for getting into these. I'm not saying AMD is a bad company or whatever. I just don't have a position on it, and right now I don't think I want to add any position right now when the market is so hot, anything related to AI. I bought HP to follow IBM and they got rid of Mark. Yeah, I'm not in HP. Is HP still relevant? I know they were doing something called the Silver Lake. That was supposed to be their not Silver Lake, Green Lake, or the cloud offering. Silver Lake is a private equity company.
Uh, that was during Carly Fiorina before you came to the US. And she really screwed up the company.
I mean,
I'm barely break even
Yeah.
if you don't count dividends.
no, it's trading at a very attractive valuation. But what I don't know is, I mean, I'm not looked at it, but it's also like almost no growth. So it is like, yeah, if
It's
it get,
two stocks now.
if
It's
it,
two stocks now. HPQ and sorry, I forget the other ticker, but it's two stocks now.
yeah, HPQ and HPE. I think one is like a printer. They separated out their businesses, right? So now I don't even realize. I don't remember which is what.
Well,
Yeah,
because they were supposed to follow after IBM Consulting. Remember, IBM bought some, and then they bought something, and it's kind of like when after Apple got rid of Steve Jobs. This is the 20 years that it was in 25 years it's in loss.
yeah. Yeah, HP bought Juniper. Yeah, I remember that news. But I've not looked at HP. I don't know if it's a value play or value trap. HPE. I mean, if I don't want to add any new ticker, if I were to add it, it won't be HPE. This is no growth. Maybe it pays a dividend and will continue to pay a dividend. And yeah, they pay 48 cents as a dividend. 8% operating margin, 6% profit margin. Why would I not? If I were to pick it, maybe I'll put that money in my Google or Microsoft personally. Cool. Alrighty. I guess let's call it a day here. Time to go out for lunch. Thank you everyone for joining in today. If you're joining bootcamp, I'll see you on Wednesday. Otherwise, we'll meet again here next Saturday. Bye-bye. Cool, go.